Hello everyone, welcome to Just Invest Today, and in today's video, we're going to do an Alibaba stock analysis, an intrinsic value analysis, and just finding out the investment thesis and what is going on with Alibaba because it's still going lower. Look at it, it's at $115. So it's super critical to go over your investment thesis and why you bought Alibaba to kind of keep you sane, keep you on track, not focusing too much on the market and what it's doing. While doing this, we are going to look at RV Capital's thesis. Rob Vinall, he's averaging 20%, 90% a year for almost 11 years. So we're going to go over this investment thesis and see what he says about Alibaba and why he's super bullish on Alibaba. Bob's a fund manager, so he has to explain to his investors why he's buying Alibaba and what's his investment case. So the first thing we're going to talk about is, yes, there's extreme pessimism for Alibaba, and that's basically what is cratering the stock. He has investments in Prosus and he has investments in Alibaba. So he has to go over the heightened risk. So remember, it all started with Jack Ma, the cancel IPO, his speech talking about how China and how they're not like innovating as fast as he wants to, and then the government basically clipped that. That's what basically crushed Alibaba stock, and that's what he kind of talks about in the beginning part of this article, and how this is creating major fear in the market. And he sees a complete different opposite view of what everyone else is seeing. At a high level, my sense is that investors in the West are missing the wood for the trees. They focus primarily on what is perceived to be going wrong in China, in this case regulation, as opposed to all that is going right. Yes, regulation is increasing in China, but where is it not? It may or may not be a net positive for investors, as I discuss later, but irrespective of this, the important point to grasp is that the right direction of the economy and living standards is firmly up to the right. The debate around regulation is a distraction. So this is basically his view, and what he's seeing is that the pessimism of the market, and this is mainly caused by the media. The media is just throwing so much Alibaba negativity out in the market. It's just going crazy, and it's all negatively influencing Alibaba. And on top of that, people see Xi Jinping as this guy that doesn't really know what he's doing. He's just throwing these regulations on these companies willy-nilly, not looking at it as a strategic way of looking at China. He's just doing this randomly just to kill the companies, just to kill everything. But he's seeing that you're not really seeing what is really happening and how the Chinese economy is growing, how it's advancing, how it's actually a market economy. And people don't think it's a market economy. People think they're not going to do capitalism anymore. They're going the opposite direction, and government is going to be focusing more on socialism. So that's what people are kind of saying, and he's just like, no, that is not happening. Like this video, subscribe to my channel. I'm always providing you guys with so much new content, man. Like and subscribe. Click that subscribe button right now. What was the regulation about? And then he talks about it. Choose one. Alibaba. Remember how Alibaba had this view of that you only can pick our company and you can't pick another company, and Alibaba was doing it, Meituan was doing it, and that was bad for the economy basically, and that was helping Alibaba, right? But the Chinese government does not want that corruption, doesn't want that monopoly power anymore. So it canceled that. Then the gig economy. The conditions of the temporary workers is further an area of regulation. Local service platforms will have to make social insurance contributions to drivers. In addition, there is a focus on unintended consequences of algorithms, safety, working hours, accident insurance, and minimum pay levels. So the government, it wants to help these areas, the gig economy. It wants to get rid of the anti-monopoly practice of choose one. Financial stability. Remember how they killed Ant Group? Ant Group was ordered to restructure its financial holding company and will be regulated by the central bank. Amongst other measures, it was ordered to retain more of its loans, hold minimum levels of capital against them. The same rules were later applied to all market participants. So it wants you to hold more money in case of a crash. In case of you lending out all these loans, people can't pay it back, and then who's gonna pay all these loans that they couldn't pay back? Like, who's gonna step in to do that? Like, they don't want the government to just be able to have to handle all of that. they want to make sure that Ant has all that money in case stuff happens, or has a minimum amount of money in case stuff hits the fan. So looking at those three things just so far, he's saying that this is actually natural. This is actually a good thing. Stopping this power, making sure this is in order, is a good thing for the economy. It's not a bad thing. After school tutoring, he stopped all the after school tutoring because it had a negative effect on students and parents, and had parents have to pay incredible amounts of money, and how they want more kids in the economy, more kids being born, and you can't do that if school prices, if tutoring is at these all-time high levels. So he's saying that's a good thing. Online gaming, that's another thing. Data privacy. Every country is looking at data crazy heavily now, and they're making sure that nothing gets out. Every country is doing the same thing. USA, Europe, every country wants their data to be stored in their country. But here are the key takeaways. Concerns of regulators in China are no different than regulators everywhere. So he's saying the West is doing everything similar to China. Think about Google, Facebook, Amazon. These companies all get regulated in the West. So what they're doing in China is no different. They're trying to all solve these problems, and China didn't have these laws before, so it's making up for those laws. The big difference in why people hate it when it comes to China is that it's very strict, it's very fast. There's no discussions about it. And in US and in Canada that takes years, but in freaking China, that takes seconds, it takes weeks, takes days, whatever it is. So that can be a negative and a positive, and sometimes people can see that as a negative, sometimes people can see that as a positive. There's different ways you can think of it. So it can be a positive, you get results really fast, you can actually move faster, but it can be a negative because one person has rule, one person has the say, and it can just work way too fast. So all depends on how you see it. So people are seeing all that as a negative light instead of a positive, and that's showing in the results of Alibaba, Tencent, and how these stocks are crashing. Regulation varies depending on the industry, and if the industry is providing like good economic wealth and actually helping the consumers, it's going to be beneficial overall for China and the market. So you don't have to focus too hard on regulation if they're actually doing positive for the country overall. So he's just saying that the regulation is more desirable, it's common sense, it's not just random. So the Chinese government is not looking to destroy these companies. Yes, it destroyed the tutoring companies, that was an isolated situation, but it loves the companies that are dominating in China that actually provide jobs, security, financial wealth, and just like more prosperity in China. So he doesn't think that the government, Xi Jinping, is going to kill these companies. So his conclusion, regulation is clearly increasing in China. Again, where is it not? This seems to be as much as a function of the lack of regulation in the past as a desire to over-regulate today. Overall, the changes to date seem manageable, except for companies that are viewed as having no societal benefit. Who can expect little mercy from regulators? The pace of regulation is certainly faster than the West, reflecting the different political system in China. Overall, it's not clear to me that one approach to regulation is ambiguously worse than the other. As such, the conclusion that many seem to be drawing in the West, that China is uninvestable, strikes me as wrong-headed. I, for one, will not be deterred from investing further in China. So that's his conclusion. That's what he sees, and I honestly came to the same conclusion. That's why I invested so heavily in China way back then. And these dips, these opportunities don't present itself all the time, and I think it's an amazing buying opportunity in my opinion. Do your own research. So that's his conclusion when it comes to all the haters, all the people saying Alibaba is done, China is done, you can't invest in it. And then ultimately, this is his investment case. The investment case for Alibaba is straightforward. Its core marketplaces business is a wonderful business. It is highly profitable with an underlying operating margin of 75%. It can grow without committing much incremental capital. It is protected by numerous entry barriers, including massive installed customer base, network effects, and a thriving ecosystem. It is likely to grow in the low to mid-teens for the foreseeable future, driven by the growth in online consumption in China. In addition, Alibaba has various other businesses. Not all of these are likely to prove valuable. I am skeptical of its efforts in new retail, free shippo, community group buying, as well as local consumer services and international marketplaces. However, losses there are likely to be dwarfed by the profits from the more promising businesses such as Ant and Alibaba Cloud. Based on Alibaba's marketplace business core commerce adjusted EBITDA 35 billion, its marketplaces businesses can bought at a low to mid-teens multiple of its underlying profit. This is far below the average market level for what it's almost certainly an above average business, and far below what might be considered appropriate for a business with its profitability and profile. Basically, he's just saying, he's summing it all up, is that he thinks Alibaba is durable and has a competitive advantage that can't be broken, and people have a bad view on China, and he sees the profitability for this business to continue to grow as more people in China consume more products, as more internet companies use Ali Cloud, as more people consume, you have more people using Ant Financial, using their pretty much payment services. All of that is expanding in China and it's going to continue to grow as China becomes one of the most powerful countries. The GDP keeps growing, gets higher, and the growth it just continues on and on and on. So that's his investment thesis. And that's what I see, and that's what I've been saying. And even him saying that Lazada, Freshippo, those companies might not do as well. And I think those companies will do just as well too. So even if they're not generating revenue now, I still think in the future that these businesses are going to be highly profitable. So this is his investment case, investment thesis. So please like this video, subscribe to my channel, man, and I'm out. Peace.